Hello, welcome back everyone. I hope you're all doing fine and well. In this video today, we're going to discuss my top trade setup. And before we actually talk about my top trade setup, I'm going to just brief you about the trade I have running. For the past 2 weeks, some are running for the past 2 weeks, some just a couple of days, but none of them is less than 24 hours, or let me even say 48 hours. So without further ado, guys, let's jump straight into it. All right, so first off, this week we have a couple of fundamentals coming today. On Monday, we have just a medium effective data. Let's put it that way. All right, not high impact, just medium impact data. But on Tuesday and Thursday, we have some very heavy loads of data coming, so you might want to prepare yourself for that. You can do all of this yourself. You can check them out yourself. So on Thursday, we have we have some monetary policy statement. We have the monetary policy summary, and then the MPC official rate vote in the United Kingdom. So you want to be careful that that is going to possibly move pound heavily, especially when we know that they're planning to cut 25 basis points. So I'm still leaning toward bearish pound, which I'm going to share with you later as time goes on. But at the same time, you want to prepare for that heavily. Also, we have the unemployment rate coming, unemployment claim coming on Thursday before we now get our NFP, the unemployment rate, and the hourly earnings on Friday, which is the NFP Friday. So that said, let's quickly talk about the technicals. I'll share my top trade setup. I'll share the trade I have running, and then we're gonna carry it off today. So if you are not following me, please be so kind to like the video, subscribe to the YouTube channel, and if you have any question, you can always drop it in the comment section. So now let's talk about dollar first off. Okay, but before I talk about dollar, I want to show you the economic heat map on Edge Finder as far as US economy is concerned. First off, you can see that right here we have the GDP growth. Okay, the GDP growth in the United States dropped by 0.4% last week Thursday, which is not very decent. Okay, and we saw that impact on DXY. However, the manufacturing PMI and the service PMI came very strong. We have a weak retail sales month on month, which dropped by 0.2%. Okay, and then the CPI year on year, the core CPI month on month, the PPI year on year, and the core PCE, all of them came quite decent. Okay, the CPI and the core PCE came unchanged. However, the PPI month on month, the core CPI month on month, they all came very strong. And when you combine that with the consumer and the manufacturing part, okay, the business and the consumer part of the economy, which is very robust right now. I mean, it keeps getting boomed every second, which is very good. Okay, and then when you now attach that to the tariff that the United States president, President Trump is imposing on Canada 25% tariff, Mexico 25% tariff, and China with 10% tariffs. That is another thing. That's another load that could be sentimentally perceived as a stronger dollar. Okay, so literally the greenback is leaning toward the risk of sentiment right now, slowly. And last month we have a very strong NFP which came by 96,000 higher than forecast. Okay, and also the unemployment rate also came shorter than expected. We have the unemployment claim last week, which is sometimes it's called the initial jobless claim, also come shorter than expected, which is really good. And also we have the job opening that came very, very good. All right, so this is signaling a strong dollar. I want you to put that in mind first off. Now, taking a look at the UK economic heat map. All right, so while I wait for that to load up, because it's been taking a minute for Edge Finder to load up for me today. Now, let's talk a little bit about US dollar. So dollar opened today. Today is today is Monday, very early Monday when that's when I'm recording this. All right, you can see where we have dollar right now. And personally, I said this last week in the previous video I recorded. If you have not seen it, you can go and watch it. All right, so I said so far dollar remain above this region right here, the 107 region. Okay, the 107 region, if it stays above it, I'm still leaning towards a bullish dollar, or as a matter of fact, a bullish DXY. And so far so good. It seems to be doing exactly that. And now with the data or the information that came out during the weekend when Trump eventually, or let's say finally, signed up on the 25 on those tariffs that I mentioned earlier, 25% on Mexico, 25% on Canada, and 10% on China. All right. So I was expecting a pump, okay, in the price of DXY, and exactly what happened this morning, as you can see right there, which is very, very serious and very sweet for my for my dollar trade. All right, but before I go to all those trades, let's take a look at the GDP. I mean, the United Kingdom economic heat map. So right here we have the GDP growth shorter than expected, the same as the United States dollar. Okay, and you can see the manufacturing PMI and service PMI, they all came very strong, which is really good for the business part of the economy and also the consuming part of the economy. They are all doing very well right now. They're all booming. That means people are spending, okay, and then people are also manufacturing really strongly. So we have a robust business and robust service, consuming aspect of the economy, literally. All right, and then the retail sales is not very good. Okay, it came shorter than expected by 0.7%. The inflation in the United Kingdom is slowing down by 0.1%, which is quite good. But this doesn't really factor to what we have with the interest rate. That is why the last time it actually they finally do what they raised the interest rate by 25%, which is 25 basis points, which is not very good. All right. While every other countries are cutting rates in December last year, United Kingdom eventually increased their rate from 4.5% to 4.75%, which is plus 25 basis points, which is not very strong. I mean, it was taken as a bearish because definitely UK is already the trade balance in deficit, and now you are increasing interest rate. That means you're gonna kill consumers, and then the manufacturer are also gonna get squandered. I'm very sure by the time the manufacturing PMIs and the service PMI for this month will be released, I mean for January will be released, we're gonna get a whole different story now. All right, probably we're gonna just get all rate. Okay, maybe I'm not sure. I'm still being sentimental right here, but I mean everything is right there, and you can see the unemployment rate is what is going up. That means some people are still losing their job in the United Kingdom. So these are all factoring and signaling what the bearish United Kingdom economy. All right. And before that, I'm also going to show you the COT data. Okay. So you can all have a very clear picture of what the institutions are doing. So we're going to start with the United States because these are very important to the trade I'm going to be sharing with you and why I'll be telling you some things about my trade. So you can see the US right here. You can see we have a 25,372 long contract and we have 11,172 short contract. Okay, the long contract get added by what? The number of long contract that got reduced, it got reduced by what's it called again? Negative 3,439. That means some people actually closed their long contract, and short contract also got reduced by what? By 2,767 contract. And then when you now do the total, okay, when you do the what's it called again? When you the percentage of both long and short contract, we still have 69%. Okay, up almost 70% people, or let's say institutions, still leaning towards buying. They're still holding their long contract on USD, whereby we just have 30% short contracts. Okay, that means risk off. People are still buying United States dollar. That's what that means. Okay, so that's another thing you have to take at the left, on your left hand. So let's take a look at CHF. A very interesting trade that I'm holding a buy right now. So we saw a long contract of 69%, almost 70% on USD, and we are seeing here a whooping 90%, over 90% short contract on CHF. What's that telling you? Okay, you can see the difference right here. You can see just negative the difference in the last between the long contract and the short contract for last week. Literally is maybe something around 1,530. The people that closed their long contract, and just 3,000. You can see people even the bigger number of people close their long contract, possibly to even add on to what the short contracts. You can see right here we only have 367 people closing their short contract, and we have a whooping 90% short contract in percentage. That is something you have to pay close attention to. All right, and this could lead to us seeing a crazy bullish run on USD CHF. All right, that said, let's take another look at CAD right now. Okay, where is CAD? Okay, good. I want to check if I'm really recording. So I think I'm. So look at CAD right here. You can see another 88% short and 11% long. All right. Now look at this. We have 21,209 long contract and 168,820 short contracts. And you can see even people the institution are adding to their long contract, whereas they are selling their short contract. Okay, they are closing their short contract. So despite the fact that they are leaning towards buy, okay, they still buy because technically the card is still kind of like hovering around the old tariff thing. Okay, but still you can see we have the institution with we still have a whooping 88%.83 short contract, which is a slap in the face of CAD, okay, of the Canadian dollar, literally. And lastly, I wanted to look at silver because I have a very good take on USD on silver. All right. So first off, you can see that we have 74,656 long contract, and we have a 30,288 short contract, and a whooping of what 71% long and 28% short. So what is that telling you? There's more people, more institutions. Okay, the banks are leaning towards buying silver. Okay, and even if you check gold as well, you can see we have 89% long. Okay, we have institution going long with 89% of institution are going long on gold. So literally, I would just want to lean. And first off, my trades are already very well positioned. Taking a look at USD right now, I'm very fortunate that I took a very good buy at a very early stage of USD. And like I said earlier in the last video that I recorded, I actually had to take this trade like 3 different times. Okay, and I started buying from here. That tapped me out in the stop loss. I took another buy right here. So I took a first buy right here, tapped me out stop loss. I took another one right here, tapped me out stop loss. And I took the last one right here, and this is the one that's running right now. So first off, this is the deal. I want to see this actually break above here, do a very nice pullback, probably to this area. Then I'll head on to my buy trade, and I want to see it run towards the upside fast and easy. Okay. Now, this is the caveat, and I want you to keep this at the back of your hand before you use it to eat anything sweet. So far, USD remain at the top right here, above the structure. Okay. The only reason why I would consider probably selling or shorting USD is first, the COT data have to show me a whole different story from what I'm saying right now. The dollar economic heat map has to show me a whole different thing from what I'm saying right now. And technically, I want to see USD actually break below 0.99000. If I see it below there, then yeah, sure, I will look for buy. I will look for short opportunity, for short trade. But if nothing changes, dollar remains strength. We still have institutions still leaning towards shorting CHF. Definitely, I'm going to look for buy. I'm going to look for buy everywhere, anywhere. All right. So that said, that was my trade on USDHM. It's still quite young. All right. I opened it on Wednesday, I believe. Yeah, on Wednesday last week, and it's running quite well right now. Pound USD is a trade I opened last week, Thursday, I believe. The short trade I actually took a very long time before I came to terms to open this trade because, like I said, I've opened so many dollar trades when dollar was still quite unstable. All right, I've opened a few dollar trades that ended up in loss. All right, so I figured let me just wait on this one. I could have taken the short trade right here, okay, but I waited for the break below the structure on the 4-hour time frame. I mean, it's between 2 hours and 4-hour time frame because that's where I look for entries anyway. So I look for a close below here on Thursday and I took the trade right there. So right now, still looking, it looks very good. Okay, I've showed you the economic heat map of the UK. It's not looking good. And if fortunately they ended up cutting their rates next week, I mean on Thursday, maybe I'm gonna see pound actually come all the way down here. Okay, but fingers crossed, and yeah, fingers crossed. So that's that on pound. GJ is another trade that I really love that I took it. Okay, I took it multiple times as well. I took it 2 times, all right, because as you can see right here on GJ, okay, it's the trade that I took. The first entry was around there, like I said, on 2-hour time frame. And then when I took the trade right here, it's loading up. Don't worry, everything will come back here. Like I said, I took the first short trade right here, and the market took me all the way to the top. And then I took the second short right there. And right now the market seems to be going down. Although the first short trade I took right here, I trailed my stop to this area, and then I got tapped out on Friday. But the second one, the first one that I took right here is still running right now, which I will be sharing the results as time goes on when I'm finally editing the video. And that's my trade on USD, on pound yen right now. Yen seems to be quite leaning toward the strength. There's some strength coming to pound, to yen, literally, because I was reading one or two things earlier today. So we have the labor market is, the wage growth is there. Okay. The trade and external demand is also quite, they have a higher import cost. Japan remains heavily dependent on energy imports, making it vulnerable to oil fluctuation. So we have oil kind of weak right now. So that's another kind of like what is probably hindering yen from making a very strong push. But the economic growth, the GDP outlooks look very good. The inflation is cooling down. The monetary policy remains the same, and Governor Ueda is also hinted that there is possibility of ending yield curve control. Okay, if inflation and wage growth remain strong, which they have right now. So that is also kind of leaning towards a stable economy, not super strong. Yen is not super strong, but at least for now it is stable. All right. So that is the reason why I know that pound is extremely weak. So I just have to go for this one, for this short, and I'm actually glad I took it. And then we have USD card that I took a buy last week on USD card, which is very good. there was a very massive gap this morning, which is well expected. I mean, it is well expected. Everybody should have expected this. All right. Although I was tapped out, and on the small account I was trading, I was tapped out right here on Friday, and I knew that would be a very crazy mistake. I didn't want to jump in again at the top here. And then on Saturday, Trump did what he did. He said he ended up signing off on the tariffs on Canada, and I was like, what? No, there couldn't have been any baddest time that my trade would be tapped out at trading. So you can see right here, that was a very, very terrible thing. But at the end of the day, it is what it is. The market, it's gonna do what it's gonna do. There's nothing I can do about it. So that's that on UCAD, but I have it on open on another account, which is a little bit bigger account like that. That I don't go conservatively. I kind of go like moderately. I risk moderately on that one. That's why the trade is still quite running right now. So now, based on the trade I'm looking forward to take, the first one is silver, which I would like to show you on Edge Finder right here, the setup that I'm actually looking forward to. And the reason why I want to take a buy on silver, you can see right here, silver right here is reading +5, and it shows bullish. All right, and then if we go a little bit deeper on that, as on that area, you see right here, you see the Edge Finder bias, excuse me. You see that the score is 2. All right, we have the COT data that remain quite zero. Okay, remain flat. Retail sales is not very strong, -2. Seasonality on the other hand, it supports silver and gold. Okay, excuse me, this is gold. Let's go and take a look at silver. It will take a little bit before this. Yes, this silver. So let's take a look at silver right there. So I think, yeah, it's gonna change now. Just give it a minute. Yes, so on silver, invalid metric value. What is this? I don't quite understand. Sometimes it just take forever, or sometimes it's quite fast. So this is one of those times it's slow. I'm gonna come back to it. So technically on silver, I'm leaning towards buying, honestly. And yes, as you can see right here, the market seems to be pulling back heavily, which is something I'm actually expecting and I really appreciate. So I want to see it come all the way down to probably 61.8% before I start looking forward to taking a buy trade. And if all things being equal, all right, it's kind of trade I want to see actually gravitate towards the 36.89 region right at the top here. Okay, but I would love to take it very, very cheap. Okay, maybe at 30, when it comes all the way back to 61.8 Fibonacci retracement level, maybe I'll give it a shot right there during the London market, during the London Open today. Okay, we see how that goes. But silver, I think this should have actually been done. Silver, are you ready? It's still not ready yet. I'm gonna go back. I'm gonna go back later. So, anyways, as far as silver is concerned, okay, I think it's ready, but the data did not fully load up, which is not good. So I'm gonna refresh it and come back later. Sometimes Edge Finder can actually act very funny. Okay, so we just have to give it some time. It's a very interesting app that I really love to use. Okay, so now the plan is to see it come all the way back to probably retesting this trend line. You can see this trend line has acted as support. So see it come back to this area that also confluence with 50% Fibonacci, and then I will look for buy opportunity on silver. That is the first approach to silver for me. Okay, I'm looking forward to buy. The reason why I'm considering this and not gold is because gold is already at the all-time high. I don't want to mess with that. Okay, and silver is a more slowly paced and slow-moving asset that I genuinely love. Okay, so I just want to give it some time to find its pace, to find its strength, to find its bearing, and I'm just going to join slowly. And then lastly, a pair that I'm looking forward to take this week, it will be USD Don't forget, despite the fact that we saw a very crazy dump on GJ, you can see what's happening to UJ. Like I said earlier, yen is quite stable. Dollar is obviously strong. That is why we are seeing this kind of, slowly paced move in the price of UJ. Okay, had this been dollar is strong and yen is weak, you would have seen yen actually move very crazy to the upside. I mean, it's something like this. Okay, we are not new to something like that at all. Something like this right here. Okay, we are not new to it. But because yen is stable, it's quite strong, is emitting strength. Okay, and dollar is extremely strong, no doubt about that. So that is the reason why we're having a mixed signals between USD and GJ right now, and that is why I don't want to rush into this. So possibly a buy trade is very good right here. Put my stop loss here and then cross my fingers. But I would love to see a much decent break on a lower time frame, possibly on a lower time frame. Yeah, I would like to see a, excuse me, I think my system is a bit draggy. All right, so I would like to see a break above here. Right, if I see something like this, I will take the buy right there and put my stop loss right here. It's more like the same thing if I take the buy right here, but it's just gonna give me a little bit of a strength and confidence to believe this trade that it worth it. Okay, that's more like that. And definitely I'll be jumping to this trade, possibly during the London Open later today. Okay, my time anyways, and I'll be targeting right at the top here. Well, because once we see there is a high possibility that there'll be Bank of Japan intervention once the USD JPY cross above 160. Okay, 160 zone is their intervention area. So we'll probably see it actually come all the way right here and then probably drop again like we saw right here. So fingers crossed, and that might be that's also another sentimental information because we don't know if it's going to happen anyways. But at the end of the day, we still have to pay close attention to technicals, look at what the fundamental is saying, and then go for it. Okay, I think this is the silver is still not holding up, so I'm just going to leave it alone. All right, so that's that. I'm also looking to short CAD JPY. Don't forget we have a stable yen and a weak CAD, and also CHF JPY. But right now, they are not giving me the vibe. Okay, they're not giving me that kind of vibe, and I don't like trading in a range. You can see right here we have more like a range bound right here. So possibly if you get a breakup below here, I will look for shorts. Okay, but right now I have my highs on CAD JPY. All right, and yeah, CHF JPY literally. So where is CHF JPY? Swiss yen. So this is Swiss yen right here. Like I said, I'm also looking forward to short CHF JPY because don't forget the COT data I showed you earlier. We have a very weak yen. I mean, very weak Swiss and very weak CAD. I'm not sure if we check yen. So let's take a look at yen. So you can see right here, yeah, exactly. You can see right here on yen, we have almost 50-50. All right. We have 49.75% long positions and we have 50.25% short position. And you can see right here, the long contract is 96,800. The short contract is what is 97,768. Just a slight difference. And you can even see that there is a more close on the short positions and what a new open long positions by the banks, by the institutional market. So that alone should signal that we have a moderate yen, we have a moderate economy in Japan right now. So you don't want to go crazy on the yen pairs, right? Just yet. Okay, so that said, yeah, this is my CHF JPY. I'm still kind of like leaning towards a very easy move on that one, but we see how it goes right now. My trade are still running very well. I'm holding on to them, and I'll see you in the next one. Don't forget to subscribe to the YouTube channel. Don't forget to follow me on socials. I'm on IG, I'm on TikTok, and I'm on Facebook if you do something like that. So I'll catch you in the next one. Have a good day. Bye for now.